You're losing money every day and you don't even realize it. It's inflation. Now, most people think, okay, here we go again, inflation. What does that even mean? Well, they're tricking you because you put $1 in the bank, or $100, or $1,000, whatever, and then you look and you still have that $1,000. And you think, I've lost nothing. Inflation hasn't affected me. It has. You've lost buying power. How have you lost buying power? We're going to talk about that. We're going to talk about true inflation, and then we're going to talk about what you can do to make sure that you hedge against it and you get ahead of it and you don't let it crush you. 3 days a week, I put together what I call the dollar is dead, Monday, Wednesday, Friday. The rest of the videos during the week and weekends, they're to help you get out of debt. I have many videos to do that. I don't profess any particular method, but I've got many of them just to show you how they work so you can pick what's best for you. Okay, inflation. What we do every Friday is we go over a basket of goods, as I like to call it, things that you can keep and hold instead of dollars. Because of inflation, the dollar loses value. Over the last 100 years, it's lost 99% of its value. I say that every time. I know it gets old, but for those of you that are still just holding dollars and nothing else, it may not be the best idea. So here's the disclaimer. I'm a big dumb animal. Don't do what I do. Informational purposes only. But I've been doing this every Friday since February to show you that over time, things do better than the dollar. You might have seen recently that inflation, they do it on a month by month, but it's for the previous 12 months. They call it year over year, 3%. Okay, so you put $1 in the bank, 3% inflation, you now have 97 cents. However, take a look at this site. It's called truflation.com, truflation.com. Over the last couple of years, on average, the aggregate has been 25%. That's insane. And if you scroll down here, you'll see category by category, whether it be housing or food or whatever it is. So what does that mean? That means that just a couple years ago, you put $100 in the bank, and now it's literally worth $750. People don't think as much about inflation, but imagine if that happened. Imagine if what we did was we said, on aggregate, we're just going to take a certain amount of money out of everyone's account and all the prices will stay the same. It's not possible. But if your account went from $1,000 to $750, or $10,000 to $7,500, or $100,000 to $75,000 over the course of 3 years, you'd lose your mind. You'd say, this is crazy. But that's exactly what's happening to you. So what do the rich do? That's what I always like to say. The rich hold assets. Think about this. If you buy stocks, what are you doing? You're buying stocks. Now, you may look at your statement, and it says you have $10,000 in value, but they're not $10,000. You have, let's say, 100 shares of stock. It's worth $10,000 if you were to sell it. So if the stock goes up in price, you're gaining, right? If you buy gold and it goes up, you're gaining. Gold is considered an inflation hedge. Just like now crypto, people are calling Bitcoin an inflation hedge. Whether it is or isn't, whether you believe it or not, it's yet another commodity. So there are things you can do with commodities like gold, silver, Bitcoin, Ethereum, whatever you want to look at in the crypto world. Then, of course, there are individual stocks. Of course, there are funds like the S&P 500, which has been talked about as one of the best park it and forget it type of funds. I think even Warren Buffett told his wife as one of the instructions when he passes away, just put the majority of the money in the S&P 500 index and don't think about it. Okay. So there are things you can do. But if you look at it from the standpoint of you're holding on to dollars, we're going to go over savings accounts, checking accounts, CDs, dollar equivalents. They typically will go down in value because, yes, you're earning an interest rate, but there's also inflation, which is eating that interest rate. And there's taxes on the money you gain. So they're getting you two ways. Because I always say, the government the government doesn't care about you. And banks don't care about you. It's up to you to take control of your financial freedom because real freedom's financial freedom. So here we go. We're going to walk through these alternatives to holding dollars so that you can beat inflation. The first three things are considered just cash equivalents. Savings, 3-month CD, 3-month treasury. You can see here once a month the federal website's updated. They haven't changed much. 0.46 for savings, 1.53 for a 3-month CD, 5.41 for a 3-month treasury. Now, they're considered cash equivalents because in savings you can just take the money out, just like a checking account. And the CD or the treasury, they're short-term, 3 months. So within 3 months, you'd have cash. Well, if you look at the bottom, you'll see that inflation's around 3%. Therefore, if you get a couple percent on your money and then you pay taxes on what you gained, well, you're really not making out. Okay, so let's look at And as you can see here, all these are back from February till now, trying to point out that assets may be better than just cash. Look at gold, silver, Bitcoin, and Ethereum. Two types of crypto. Bitcoin's being lauded as a store of value, much like gold. Some believe it, some don't. I happen to. Take a look at this. As an example, gold, $2,050 back in February, $2,519 now. Of course it can go up, of course it could go down, it's volatile. But in that short period of time, about 6 months, you're looking at a 25% gain. Whereas a 3-month treasury would have yielded you 5%. See the difference? Same thing with silver. Huge gain. 7 on 22, it's around 20%. It's at $29.79. Bitcoin's at a little over 61,000. Earlier this year it was 43. Ethereum's at 26.65. Earlier this year it was 22.99. Bitcoin and Ethereum are considered they are the largest market cap coins, crypto coins, if you will. You can also buy ETFs now. So you don't have to actually learn how to buy those individual types of crypto. You can just go through your broker and buy an ETF if you're interested. All right, just to point out, we've got the Dow Jones. That's about 30 stocks. Well, it is 30 stocks. You can see it was around 38,000. Now it's 41,000. S&P 500 is that typical, hey, set it and forget it, buy the index fund and just watch money grow over time. 49.58 earlier this year, 56.25. Everything is up substantially more than if you just held cash or cash equivalents. Now, some of the numbers I like to look at, just to keep an eye on things, inflation around 3%, unemployment was over 4%. Not only that, but if you noticed, or you probably have seen, in the last week or so, they revised their numbers from, I guess, about first quarter of 2023 to first quarter of 2024. In other words, for a year's worth of unemployment numbers, they said they actually had 800,000 less jobs created than they thought. So they put out rosier numbers, and now they're showing less. That doesn't help. That may mean that we are in or going into a recession, potentially. Unemployment's up, not good. Now here's what's interesting. Look at the 2-year Treasury and the 10-year Treasury. Big moves here. The 2-year went down to 3.92. The 10-year went down to 3.8. Now if you see at the bottom there, I have 2-10 inversion. They're still inverted. Look at this chart. Typically that means we are in or going into a recession. It's just one of many factors people like to look at. But the fact that the rates have come down pretty significantly, the market believes that the Fed will lower rates. Maybe not a lot, but in September they think they will bring them down. So that's why the 2 and 10 have changed, but yet they're still inverted. So that's it. I hope this was helpful. We do this every Friday. If you're not a believer that you should hold things other than cash, just Google online and look what the rich do. They hold assets. They don't hold dollars. Of course, hold dollars for emergency savings and daily transactional. But personally, I like to have a basket of goods. I like to try to hedge against things, knowing that things go up and things go down. Hopefully, if you've got things such as gold or stocks that sometimes go in different directions, then if you do have to sell something, well, hopefully you'll be able to sell it when one of your assets is up in value. So I hope this is eye-opening. Have a great day.